have a good day, but it won't be, which I doubt. No? Eeyore, he nailed it. I couldn't think of what he usually says. Like, it's not that. He'll say something, which I doubt. Come on, man. Inner child right there. Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? AMC to the moon. I see that there. To the moon. That's a worthwhile one there. Welcome to the Closing Beat. We're financial advisors here at Jazz Wealth, and we've got a decent amount to talk about here today. It wasn't very active of a day as far as the stock market is concerned, but there's things we can cover, so we'll get right to it. Then take your questions if you have any, and take it from there. See what happens. Right? Here we go. So on the screen there, you've got the S&P 500 working its way back up to these highs, these prior highs right here. It seems to be the area that people want to use for resistance at the moment, or a known area to at least maybe stop buying so much. If you're using the SPY, which would be an ETF you could use, same thing. Broke the downtrend here, headed back up into these highs. So the big question mark in the stock market right now, the S&P, is this high. And so we'll see what happens, maybe going into tomorrow or not. Up here around 458, let's call it. And so today, even though we started off the day with a little bit of weakness, we're able to recover all of that, head back up towards these highs and get a little bit closer as well. So not too bad there. The S&P is down about 4% year to date. Did you know that? After all that, we're down about 4%, so not really a big deal there. And at this pace, by the way, we took about 5 days to go 2%. So what do you figure? Give it a little break, say about 10% or 10 days till we hit new record highs again. That's the pace that we're on. Massive rally here. So just keep that in mind. This is not how fast the stock market usually moves. Now, if you're looking inside the S&P here today, you might notice some of the bigger names helped do the heavy lifting. You had Microsoft do quite well, almost 2.5% there. Adobe trying to come off the bottoms a little bit. Amazon, one of the bigger contributors to the S&P's gains here today, breaking above the 200-day moving average. Even Apple recovered from a down move earlier today and was up about 0.5% at the end of the day. Tesla we'll cover a little bit later. Great day for Tesla, actually, and Alphabet. Alphabet had it closed the day down right there towards the end of the day. Some of the other names that are near the top of the list in terms of market movers, you had Visa higher on the day, Home Depot as well. And these are all stocks that mostly started the day lower and finished the day higher. Looking around inside the S&P today, as far as big gainers go, you might look at something like Carnival Cruise. Intuit was an interesting one, trying to put in a higher low there. We mentioned Adobe already. ServiceNow is another one. It's been a bit choppy lately, but trying to work its way out of there. And the Gap, up 3.5%. Is the Gap finding a bottom here? Weakness, if you're looking inside the S&P today, is going to be anything energy-related, oil-related. We talked about this. If you are going to play the first bounce after a climactic rally, you better be very quick on it, right? This is the type of move you can get. I'm not saying you can't make some money there, but you got to be quick and take quicker, smaller profits, because just like that, oil erases almost 10% of the day in one shot. Now, it wasn't just oil. You got some of the banks as well. Wells Fargo down on the day. Citigroup, these are all about 1% losers. JP Morgan, a little less than 1%. I do like that it closed off of its lows, though. You got Capital One, same thing. It was a down day, but closed off of its lows, so it's trying. Discover, same thing. So looking around at some of the financials, we started weak, like Morgan Stanley, and tried to recover, but they couldn't quite get it done. And so if you look at the S&P here today, financials come in third place in terms of the worst loser. Energy is going to be the first. And that's pretty much the moral of the story over in the land of the S&P. If you look at the NASDAQ here today, there you go. It's your best gainer on the day. I was actually down quite a bit to start the morning. Finishes up the afternoon 225 points higher. It's the worst performer year to date so far. It's still down about 8.3%. But like I said, at this pace, you're looking at maybe a loss of 5% in a matter of 5 days, right? It's moving that fast. So if you're looking at volatility, notice that volatility has been a little bit all over the place. I'll use the volatility futures so that we can look at the a little bit zoomed in here. Volatility coming out of the market, but the speed overall not coming out of the market. Remember, the VIX, I think this gets misunderstood sometimes. The VIX is, they call it the fear index, but it's actually a measure of the pricing of options on the S&P. So if the level of fear is declining, the price of options would also be declining. The premium coming out of those options would be declining. So it's not necessarily if the stock market goes down, this goes up, and if the market goes up, this goes down. That is usually the correlation, but I think sometimes that gets misunderstood ever so slightly there. If we look at bonds today, there you go. Slight rally off of lows, rates coming down ever so slightly. I'm going to use the TLT for my example here today, because we took a long trade on this one in the office trade segment, but it's down 10% for the year, which is tough considering how safe the bond market is supposed to be. Very, very weak start to the year. Down 10% is actually quite impressive there. Now, you know, and I don't have to tell you this, but rising interest rates are generally bad for growth stocks, growth companies, because we're essentially buying them now, and the price that you're paying for them is based on future cash flows, right? Future profits, future things like that. And tech is usually the one that's hit the hardest by rates because investors see rates going higher, and all of a sudden they come back and they discount what today's price is relative to the future's cash flows or profits. Hopefully I said that right. But you get the gist of it. Usually tech is the weakest there, and that's no different this year. Tech is the worst performing sector, although it is coming back and attempting a little bit of a rally throughout the last couple weeks. Tech still finds itself almost at the bottom, down about 7.5%. And so we still have this happening because of these rates. Now, if you're looking at TLT, remember the question you always ask is this odd? Right? You look at something, is the fact that it's down 10% on the year, is that odd? And so we actually want to take a look at that. So if I come over here, I'm sorry if it's a little bit odd. Bring this in where you can see it. Here is the S&P's performance following a 10% drop in the TLT, which is what we have at the moment. Going forward, it actually is a bit of an opportunity for a bounce in the S&P. Going 1 month out, if you can see it there, 4.67% is the average gain 1 month following the TLT falling 10%. In other words, you get a little bounce in the TLT, get a little bounce in the stock market. Same thing would be true, but to the tune of about double over the course of 3 months, you start seeing a more favorable bounce in the S&P. And I would argue that the further out that you go, the more you're just getting into normal market movement anyways. But in the really, really short term, if you say, ugh, I can't take this, man, bonds they're just falling apart here, typically a good thing for both the stock market and bonds, which would be helpful because this is one of those years where bonds and stocks are losing together. So it makes that whole like 60-40, 70-30 type portfolio a bit of a tough time. If you look at tech, now we just talked about tech, how that tends to perform with rates actually rising. Well, when the TLT falls, rates have risen to an extreme there, and the TLT falling 10% is actually, like, it's quite odd. That's an extreme move. So tech generally has a small rebound over the next 1 month, and about the same as the market, a little bit of an outperformer over the next 3 months. And then the same thing here. I would argue this is getting into too many more variables rather than, hey, what's happening because of interest rates? So over the 1 month, expect average performance around 4%. Not expect it, but you can see historically that's what it is. And over 3 months, about 10% rally when, again, your bonds have a sharp move lower. In other words, interest rates have a sharp move higher. You probably saw all over the headlines this weekend. Mortgage rates get a little bit crazy out there, right? So hopefully you get a little reprieve there. Small bounce. That would also help our office trades. We would be happy to see that as well. Gold also down about $30 on the day. This is the same thing. It just gave you less of a bounce. So oil actually attempted the first bounce after a climactic rally and pullback, whereas gold barely attempted anything. And again, you got to be quick on these if you're thinking about buying that first pullback, because there's the example. I've been saying it for a week and a half now. That's a tough one there. Bitcoin broke out over the 200-day moving average, and you see that up about 8% on the day. Good for Bitcoin people, right? 48,000, knocking the door at 50,000. So not bad. Got a lot of activity there. Lot of news in crypto world right now. It is incredible to try to keep up with this news because there are so many different things you can do, places you can look, custodians and wallets you can use and all that great stuff. It's a little bit of Wild West at the moment. So that's what we have there. As far as the sectors are concerned today, consumer discretionary is going to be your best performer, breaking above the 200-day moving average, and real estate, because of rates coming up coming down just a little bit, not too bad there. Energy naturally is the weakest of the day and rightfully would have earned a pullback if it was willing to. This sector, by the way, is just killing it year to date, 40% year to date. So, and that's in 3 months. So we're coming at the end of the first quarter here, and you have a 40% rally. What's the likelihood that that continues through the next quarter, the quarter after that, and the quarter after that? You got 40%, 80%, 120%, 160%. It's just not like careful. That wouldn't be very normal there. All right, as far as the old office trades, we are going to do Tuesday as our live class, Wednesday, and we'll do Friday as well. Monday got a little bit busy for us here, so I didn't get a chance to do a whole lot anyways. I put an order out for CL because remember last week we funly got CL, CF, and CLF all as trades there. So I closed CL. That was the one long position there. It was about 30% of the total profit that we could have collected. And then Caterpillar, same thing. I just happened to be glancing at it. And I said, you know what? This is trying to rally off lows as well. So took the small profit there. I believe it was 29% of the total premium. It seemed to have been a bigger position. It was a couple $100 for a quick trade there. And that's it. That was genuinely all that was done today. We will be doing a handful of things tomorrow and hopefully in our new studio there, because looking forward to that. All right, new highs and lows for the day. Yeah, that turned out okay. I was playing with stuff before the show. I shouldn't have done that. But anyways, new highs, 30 new highs, 40 new lows. There we go. We got Brown & Brown. It's an insurance company. Breaks out to new highs here today. Insurance, if you've been following, insurance has been the hot place lately. Allstate and Prudential and stuff. Very, very interesting and quick rallies following Mr. Buffett's purchase. You got Con Edison and the utilities. Remember, we talked about that just a minute ago. Utilities having a good day today with real estate. Con Edison is one of them. We mentioned the breakout last week, and Duke Energy would be the other one, breaking out of this entire range here. See, if I leave the cursor there, you can see ever so nicely. On the downside, CarMax. CarMax, I think, is going to end up mentioning a inventory issue. They have so much inventory right now. But anyways, CarMax hit new 52-week lows and managed to come off lows and finish positive on the day, 1.4%. Hasbro was one that did not. So this one had been poking at new 52-week lows each day. I just keep pointing it out because I'm kind of like, all right, if it's going to get extended here, I'd be interested in playing along, doing something with our office trades there. So I used the 52-week highs and lows list as a way to find new ideas, do things like that. All right, let's do some stocks in the news. I'll take questions and be on my way. GameStop. All right, who's in it? Talk to me now. Who's playing along with GameStops? The NFTs. Well, these guys are just trying stuff. I mean, you give them this much money by valuing their company at this much, they're going to be trying some things. So Barron said that and I read through part of it. I didn't read all of it because I wasn't interested. They admitted that this attempt into NFTs is an extreme long shot for them. But hey, they have the money. People are buying their stock saying to the moon. So while you're buying the stock, they are going ahead and selling it and just taking random shots. Kind of like AMC, if I can get a little off topic here. AMC today, also higher with GameStop. There's a lot going on at AMC. They bought a gold mining company. The movie company bought a gold mining company. They're like, hey, you guys are going to value us at this much money. We're going to sell a bunch of shares and we're going to do whatever we want. And somebody had their eye on a gold mining company and said, let's just do that. That sounds like fits our business model, right? Okta, this was the one, the company that got hacked last week, I believe it was. They said, hey, look, we're dealing with it, not a problem. It's not going to affect our financials. And obviously that's helpful for the stock, so it was up 8% on the day. Occidental Petroleum, is it that Warren Buffett may buy the entire company? So this was the one that he bought about a week and a half ago or 2 weeks ago. We found out that he was buying shares. Then he added more shares there. And Barron's said that they might be actually looking to buy the entire company. Their words, not mine. Tesla. Let's put Tesla in the news here. 8% higher on the day. They want to split the stock. They're the latest, right? They want to split the stock, and they said, oh, it's because we want to pay a dividend. You don't have to split the stock to do that. They want to split the stock because they want to maybe attract more index interest. So they're looking to get your vote to agree to go ahead and do that. And would you? Do you want the stock split? Put yourself around 550, somewhere in there. Does that sound interesting to you? I don't know. Also, Elon Musk has COVID again, and he's like, I don't know. I got it, but no symptoms or anything. A lot going on with him lately. Apple in the news, the Nikkei, which you can't always trust. The Nikkei has a habit of throwing some articles out there that are not necessarily essentially true, but they said once again that the iPhone production line is being slowed down due to weak demand for the SE model. I don't know. That's usually one where you find out a couple days later, like, oh, nope, that was misunderstood. Didn't mean to say that. What else do we have here? I won't touch the Disney thing. Disney's starting to get on my nerves a little bit. And I'm a big Disney fan. So, takes a lot to frustrate me with these guys. But I just don't know that I like the new CEO, man. He should be focused on the parks. He should be focused on production. He's all over the place, man. I think Bob Iger was my guy, man. He was much better. I wish he'd come back. And Biden is producing or is going to be doing the billionaire tax plan. Actually, there's a lot to this budget. So they're coming up with the budget there, and they say, you know what, we're going to tax billionaires at least 20% because they don't like the fact that they are not taxed on their unrealized gains. So they're bringing that back. Notice how they keep testing that? Remember when that was a thing? They were going to start taxing unrealized gains, and we all went, no, don't do that. Well, what if we did it to the top 200 rich people in the United States? So you notice how they keep testing the unrealized tax. There's a method to the madness there. They test it out, see how we can get people excited about it. Then they're going to lower the amount that they tax on your unrealized gains. That is working its way into being something that we're all going to have to deal with at some point, which is horrible. Also, they're going to raise the top bracket while we let the stream catch up and take your questions. They're going to raise the top bracket to 39, or they want to raise it to 39.6, raise the corporate tax from 21 to 28 or something like that. And heads up, they want to end the 1031 exchanges. So if you dig a little bit deeper into and just move past the headline of, tax the rich 20% minimum, what about the 1031 exchanges, huh? You're going to lose the tax deferral on your if you want to look at the wording in particular, they don't say 1031. They say like-kind exchanges in hopes that you won't notice the 1031. So that is that one. Kind of bold, to be honest, by the Democrats to try to push that kind of thing ahead of the election. So I don't know where it lands or anything, but I just kind of think if I were a Democrat right now in office, I'd probably try to lay low. You know what I mean? Lay low, maybe pitch some good ideas that are good for both sides of the aisle and just, hope for the re-election and stuff. But they're going to move forward with that because they have to. The budget has to be proposed. So we'll see. What do you think? You think we should tax billionaires? It's like 180 people, maybe 200 in total, but tax those people 20% minimum tax. And then in exchange, get rid of your 1031 exchanges and top tax bracket 39%. It's a little steep. In my lifetime, anyways. All right, let's see what questions you have, and we'll see what I can do here with that. I'm just glad this all worked today. Bristol Myers, what was the question? Can it keep going up? So I wouldn't want to. I'd be in profit trailing mode if I were in such a play. I'd be looking to say, look, if it falls down some degree, I'm going to go ahead and take the profit and run away. You're starting to get yourself a little extended. No way I would start a new position here. But of course, that's your advice there. What don't they tax now? Tax is there until there's nothing left. Oh man, got to pay some tax, don't you? Government needs Dave Ramsey. Oh man. Thanks for. I appreciate it, Timothy. Think you're getting fired up with a little class warfare ahead of the elections. Just keep in mind that midterm elections, there's going to be a lot of financial things to talk about. So I'll just point them out to you as they come up, and then as more things become serious, I'll have more of an opinion. But Obviously, I have no control over that. But the goal around elections is to get people upset with other people. It's all good, man. You got to vote for who you got to vote for. We can still be friends, right? Pick the things that are most important to you, and whatever side that lands on, I'll either agree with you or forgive you, right? Yeah. Yeah, I noticed that 1031 exchange thing, the rumblings of that coming up again. That surprises me a little bit because that's a good one for the average person. I don't know why, I get how the rich do that. That's obviously an issue, but, come on. That's a good one for the average folk as well. Yep. You're very welcome. Pavin says, how in the world are the markets up? I don't get it. They're going to pull the rug out from you? We're going to wake up one day to 700-point down Dow day? Yeah. Oh, I got you fired up now, man. Everybody's fired up. Tax everyone. Not Congress, though. Leave us alone. Thoughts on the SPY? Timothy, you got some 460 calls, but you think the SPY could lose some steam soon? Well, in that case, you got a decent profit, do you not? So, I mean, I know you bought out of the money here. I don't know how long you've had these, but do you not have yourself a reason to take some off the table, play with a little house money or something? Yeah. Plus, you got some profit in AMC there. That's the way to play that, by the way. If you're going to take a shot on these, you take a shot on an option. Buying stock and getting stuck would just be so frustrating. What's Pelosi trading? I don't know, but I bet you she's trading something. She's always very active there. Richard's got it. Can all get along, man. Yeah, it's all good. We meet here. We talk about the stock market. Whatever side you land on is cool with me. Looking sharp with the new lighting. Do I? Okay. Oh, it's a new camera. Yeah, a new camera. You can see all my pores now. Apparently it's 4K, but I haven't figured it out yet. Yep. Oh, yeah. Now, okay, so that where'd the question go? Should you start taking profits? So if you're a short-term trader, ask yourself, the market just moved 9 times faster than it ever does. It gained in 2 weeks, let's say 3 weeks, just to be safe. It gained in 3 weeks what it usually takes 6 months to achieve. And now we're at the point where if you're going to count from the low, that's a year's worth of market gains all in 3 weeks. So if you're a short-term trader, you go, is that odd? That's a little bit odd. I might want to take a little bit of profit off the table. I'm just throwing ideas out there. Yeah. Yep. Oh, good. The video looks good. All right. Sweet. I like it. I think it looks a little, it looks like the sun's going down, and we're all just hanging out. You can't see Louis either, man. Get Louis into the mix. I like it. I like it. I like it. Well, I appreciate you guys hanging out here today. I got big plans this evening. Big plans. Not really. We'll be back tomorrow. We'll see what happens. Do you have the market start the day higher into the known sort of resistance that everybody's looking at? Or do we gap up there first thing and see some weakness? What do you think happens there? I think it's going to be an interesting morning. Any kind of, really exciting news, hey, the Russia war is over, obviously would help us break through that real quickly, but then we find ourselves extended. So it's a bit of a warning sign in terms of buying any break of that anyways. So it kind of feels like a sit on your hands moment there, to be honest. But we'll do some fun tomorrow in the office trades because we always like to put on stuff there and take our shots. And we'll see you tomorrow. Enjoy the rest of your day. Appreciate you guys hanging out with us. Adios.